Hey everyone, welcome to another edition of our Smart Investing Stock Analysis videos here at Wilsey Asset Management. Got a lot to talk about. And again, this video, what we're going to do is we're going to break down a popular company. In this particular case, kind of talk about a popular sector at this time as well. As always, you find this video informative, you find it interesting, be sure to hit that subscribe button below so you're informed about our future videos as well. But with that said, let's get into it. We're going to talk about, I'm just going to say it, energy. Energy has been a hot topic. Let's talk about it today. We'll put out a stock, and as I said, kind of have a little industry discussion ahead of time as well.
And Chase, I was thinking as you were talking there, we've not bought energy in, I don't say at least a year, maybe longer, because it went up and the earnings weren't catching up. Well, now thanks to, has it been less than that or more?
Oh yeah, it's been less than that. We were buying energy at the end of last year, so it's been about 7 months.
About 6, 7. Okay, so I know it's been a while. It's not like we've been buying it; it's been going up because what we wait for is wait for the earnings to catch up to make it worthwhile to buy that company. So it went way up. Now energy prices have come back down, and we can say, and I can't say thank you to Joe Biden for very much, but I'll say thank him this time because he's starting to pick on the refiners, and this makes a great buying opportunity.
Yeah, I mean, we know about that letter he sent over to the oil companies. They're basically, I'm going to say, number one, criticizing them and almost warning them that they may take some action about these excessive profits. But, you know, I don't like paying high gas prices. I'll tell you that right now. But it is all a function of supply and demand. That's what it is at the end of the day. And you can't put price controls on things. You can't limit the demand at the end of the day. The market needs to work itself through this, I'm going to say, crisis of higher energy prices. And this government intervention, I don't think is going to solve any problems. In fact, that is what has created the problems. If you look at these RINs is what they're called, and it shifted the regulation essentially for these refineries to now they said, okay, well, now you have to buy these RINs to kind of comply with these regulations. And refiners said, great, we're going to shut off our refineries. We'll convert to biodiesel so we don't have to buy the RINs. What has that done? Created a supply crisis that we are seeing today. And who have we relied upon? China and Russia. Well, we know Russia, nobody wants to deal with Russia. China said, hey, we're going to keep our refined products for ourselves. Everybody else, fend for yourselves, essentially. And that's where we're at. We know Europe, they haven't done anything. It's just been a terrible, terrible thing. And I hate to say it, but as an investor, you need to look for places that you can profit off of things, especially for paying these high gas prices. How are you going to offset that? Well, invest in a refinery, I guess.
And James, what's important too is that you kind of look at taking advantage of a situation, and you also have to make sure that situation is not going to change. And that's why we look at refiners, which we're going to talk about, give people one that we think is a good buy for people. Again, we do recommend you do your own research, but we think it's a good time to buy them because they've come back way off their peak. And we don't believe that refining is going away anytime soon, no matter what President Biden does. He can't stop people from putting gas in their car. You're not going to have everybody's going to have an electric car tomorrow. So, and also too, we talk about biodiesel. We talk about all these other things. Refiners will be here today, tomorrow, and I think years to come. So now what you want to do is say, okay, is this a good time to buy it? And I think we picked out a good company for people that I think has a lot of potential. I recommend you go do your own research first, but we're going to try to point in a good direction today.
Yeah, absolutely. So, yeah, with that, name of the company we're going to talk about, I'll give that away. It's Marathon Petroleum. They are one of the largest refineries here in the United States. So, as always, we want to look at the numbers, not just kind of follow the trends. That's not what we do here. We want to make sure we're getting good investments and looking at the fundamentals here.
All right, so let's go ahead and start again. You can see the symbol is MPC. They're in the oil and gas refining and marketing. Look at that float, only 2.9%. You don't want to short this company because, again, it's refiner. We know it's going to be going up longer term. We do see institutional ownership is 82%. Looking at the PE ratio, it's still pretty high at 20.6 versus 14, but that's over the last 12 months. You'll be looking at what it looks going forward over the next 12 months. Price of sales looks okay, 0.4 versus 0.3. Price to tangible book value, 3 versus 10.7. That's a very good number. It means you're not paying very much for the tangible assets of this Marathon Petroleum here. Reducing price of cash flow, 8.4, about the same as the industry at 8.2. And look at that nice PEG ratio going forward, only 0.3 versus 3.0, which means you're not paying very much for the future growth of this company. Now, unfortunately, we do not see any one-year growth on the earnings. That's again because these companies are just coming out, starting to make money this past year. We do see the 5-year earnings growth 13.3, about the same as the industry at 14.2. But look at that sales growth, 92.5% for the company versus 111.2 for the industry. So you got to ask yourself, can the good earnings be very far behind? I do think we'll start seeing some great earnings, which is why the political concerns here, because you will finally start seeing some good earnings for these companies. And that's when you're all going to buy them. And look at that 5-year growth rate, 25.3 versus 10. That's just a phenomenal growth rate for this company. Now they do pay a dividend, what is it, 2.7%. They only use 13.5% of the earnings to pay that out. I could very easily see that payout increasing even to 26%. You could be getting a 4 to 5% dividend. If you buy the stock now, that's very important, because if you wait for the stock to go up, your yield goes down. So you want to buy a stock when it's low to get a nice yield on your investment. Looking at the balance sheet here, oh, look at that buyback yield, 15.5 versus 4.4. Again, it shows the company's really reinvesting in themselves, either in dividends or buying stock back. Big number there, very positive number. Looking at the balance sheet, current ratio 1.5 versus 1.4. That's okay. Debt to equity 1.2, about the same as the industry. I like seeing that. We do see on the net profit margin, wow, 8% for Marathon versus 3.5 for the industry. Return on equity 45.2 versus 23.8. Return on invested capital 23.2 versus 13.6. Got some good numbers here. Chase, what do you have going forward?
Yeah, so current price here for Marathon Petroleum was $87.29. 52-week high here, $114.35, and the 52-week low, $50.19. And see, year to date, the stock's up 38.3%. So again, it's done very well. But now I do want to point out, this is about a 25% decline from just a couple of weeks ago on June 8th. Big fall after they've kind of been picked on. I think there's been some concerns about recession as well, that it has caused some concern in the energy space. But as always, we do want to look forward for this business. We're going to go out to December 2023. I see estimated earnings per share of $7.61. Would give us a target sell price of $126.33. That's an estimated gain of about 44.7%. Now, you will notice, you see 2022 earnings of $12.80. It's about a 40.5% decline from this year to next year. And most of the time, I don't like to see that. But I personally believe what has happened is 2020, these energy companies, they were losing tons of money because nobody was driving anywhere. Nobody was using these products. By the way, the government didn't want to talk about bailing out these companies and helping them out when they were having difficult times. I think this is now, the profits are kind of, if you even them out over the last several years, it kind of normalizes the situation. So you have this huge earnings bump. I don't think you're going to see the same elevated gas prices next year. They will normalize to lower levels again, which will hurt the margins, but you're still getting these companies, in my opinion, at a very, very reasonable price. And we weren't buyers of energy, as you said, a few weeks ago, but now it's starting to look intriguing again.
And actually, Chase, if we go out a little bit further and you look at the forward PE going down the road, I mean, it was, what is that, 6.82 in 2022, but you go out to even 2024, and again, you probably have less analysts here, you have 4 versus 13, but still 11.3 to pay for future earnings is not a bad price. And as an investor, that's what you're worried about. What am I paying for the future earnings of this company? And are you getting a good price for it? And I want to point out to people, just because maybe you buy it on Tuesday, markets close on Monday, doesn't mean it's not going to go lower, but you got to look when you're investing. Am I getting a reasonable price, a good price for this business? I think you are, but again, do your own research just to make sure.
Yep. Well, as always, as you said, you got to look deeper, because this is just the surface level that we look at when we're looking at buying firms, or buying companies, excuse me. But as always, I hope you enjoyed the video, and it is for informational purposes only and should not be used as financial advice. But if you do want more information about our firm, be sure to visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com, and we'll talk to you soon.